Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, October 9, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? We have what's called fresh new highs in the S&P, the SPY. Here's what the SPX looks like. Fresh new highs across the board, at least throughout the S&P complex. Futures joining the party. Here's the shot of the ES E-mini futures contract. Is anybody surprised? No. They're above all the moving averages. The trend is your friend until she puts in a sign and or signal of a trend change at a bare minimum. We've been discussing this is a pullback-ish pattern. We were using parallel lines to signify a flaggish kind of situation. We had an up move. There's your flagpole, the flag, and here is the breakout to the upside. We had the upper line up in this neighborhood, but we've been doing that for a few days, and this turns out to be the right situation. The question is, will she keep going, or will she have a rug pull event, fake breakout situation, and a decline? We don't know which one is going to happen. We don't anticipate a fake anything. We take the market at face value, and when she's at new highs, in a bullish tape, in an uptrend, above all the moving averages, all that stuff, we take her at face value and say, we're waiting for some kind of intraday reversal, big spike higher, finish on the lows, heavy volume type of intraday reversal. Those are the things that A, give you something to trade against on the short side. B, those are the things that are taught in the course, Lazy E-mini Trader, where we go over a whole bucket full of signs and or signals of trend changes, what to look for, whether the market's getting killed on the downside or melting up on the upside. Eventually, she will turn and go the other way. We know that for a fact. All that being said, now what do we do from this point forward? Well, the first thing we do is identify or depict the last or most recent breakout area. Why? Because they'll be back to pay a visit at minimum of a test. At present, they're not much above, but no matter how high they go, whether they get to 580, 582, 585, wherever they go to on this move, they will be back to pay a visit to the most recent breakout area, 574.71. Take that to the bank. You might ask, what's the next number above even though we're at new highs? What's the next number above from a formula-driven calculator type of situation perspective? It would be 582.10. That doesn't, number one, mean they'll get there. And number B, it doesn't mean that when and if they do get there, they will stop on a dime there. It's the next number in the sequence. From a formula-driven perspective, we have no prior point of reference on the chart. We're going to see in a moment another formula-driven number and what happened today based on that formula-driven number. So we'll get a point of reference from something that happened right now, and then we can project in the future what may happen if price gets to 582.10. Couple of points of reference from things that happened in the live room today. It was a one-way tape from an S&P perspective. However, there's a lot of stuff going on around the market, so we talk about a lot of different charts, and we look for opportunity wherever we can find them. Today, NVIDIA presented opportunity. 131.65 was a proposed area in NVIDIA. We had some participation in the live room, of course. Believe it or not, we had an early day spider short today. Hard to believe, but we did have one. We'll get to that one in a few moments. We had a trade in Constellation Energy, CEG, today. You can see the bounce early on. 263.60 was the number. You can see here, high of 267.43, really just minutes later in the big scheme of things. Gave two numbers out this morning. You could see what happened later in the day. They went through the first, to the second, back to the first by the end of the day. Interesting stuff. By the way, did I mention the numbers work? How about this one? How about light sweet crude oil? Well, I don't know if this is the sweet one, but nevertheless, 71.55 was the number. Live room trade. Several traders participated in the nice rip back up in the other direction in CL, or crude oil futures. Each dollar is $1,000 a contract. That's the way it works. So what happened in the live room today? I'm going to point out a couple of important things. What I urge you to do is read the notes, go back to the chart, and double check the work. 572.85 will be important and serve as an early bull pivot. What does that mean? Above, she's bullish. Below, she's not. Keep it simple. 5-minute chart, right of the vertical is today's activity. 572.85 was our bull pivot. She tested it a couple of times in about a 10-minute span, took off to the upside, traded through the previous high. That's the 574.71. Will be back to pay a visit, but kept going for the remainder of the day. Doesn't happen that often, but today was, yes, a trend day in the upward direction. So right out of the gate in the early going, what we're saying is above the bull pivot, above on candle closes, opens the door for a push toward the all-time high around 574.71. That was the first thing on the board at 0:30. Pause the video, read the notes, go back to the chart to double check the work. I want to show you something that happened 9:21, just a few minutes before the opening bell. If, capital I, capital F, if a trader was looking for a short scalp with potential. 573.78 was yesterday's high. Between that, give or take, and 574.40 is a resistance zone where they shouldn't simply waltz right on through. So that means it's a short scalp with potential if a trader was looking for one. All right, let's go see what happened. Now, I have to go down to a 3-minute chart because this was a short scalp with potential. The potential never happened, but look what did happen. So we're focused on the 573.78, and you can see in this candle right here is where they got there. And when you look to the exact price, the high was 573.79. The pullback was down to 572.98. Our minimum base hit objective is 5 to 7 S&P handles. And as you can see, they gave you about 8 handles total. So we got the short scalp. There was no other potential. Our directive for traders in the live room and inside the numbers is we do not, and I repeat, do not let the remaining portion, the trailing portion of the trade go bad on us. So if they come back to or above our entry price, like over here, we say the trade is over and we are happy with the base hit. Why? Because base hits put you in the Hall of Fame. You never know which ones are going to give you the doubles, triples, grand salamis, Whopper Juniors, call it whatever you want. You never know. But if you pile up the base hits, you will be in the Hall of Fame. And yes, Pete Rose, rest in peace, should be and should have been installed into the Hall of Fame. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. What you had here was a trend day. When they got to new highs, we had one thing to put on the board, and that's it. And here it is, 1107. The only thing that will cause a pullback is getting back below what was then the all-time high, 574.71. The only next target on my board was 576.60. 65. It's a formula-driven number, and it's the only thing I had on the board today above the former high, 576.65. And here it is, as you could see, around noontime. They got there, they spiked it. They got there again after they pulled back. They couldn't get through it until the end of the day with the third attempt. Attempt number 1, they pulled back. Attempt number 2, they pulled back almost to the former high. Attempt number 3, they got to and closed above by the end of day. And when you look at a different kind of chart, you look at a 30-minute chart, you could say, hey, look, they got to and basically ate time off the clock right around and below 576.65. We could certainly make that case. Again, just pause the video, read the notes, go back to the chart, double check the work. It's all in here each and every day, same routine. We had 2 stocks on the move today, HT for the second day in a row, didn't hit its entry objective though. And then we had Boeing. Let's go take a look at what happened with Boeing. The first number we had on the board was 151.10. That wasn't it. They went right to the second number, 149.09, painting by the numbers. You got an average of about 150. They snapped back to 151.10, a little above. They gave you a base hit, and that's about it. But they did ricochet off the 149.09. We had a lot of participation at the 149.09. Traders, a lot of traders in the live room, for example, at the opening bell are waiting to see the market open. They don't have to jump in the first minute or so of trading. Let's see them get to a second or even third number. The odds change from a trading perspective. We have this conversation quite a bit in the live room. Look where they went right back to, the first number. It's not that it wasn't important. They just had a different destination in mind first thing in the morning. What's going on over in Camp IWM? You know what? They're still riding underneath that 20-period moving average. So spiders looked like it was a pretty good up day, up $4, about 0.7%. The IWM was lagging slightly, up about 0.2%, 48 cents. We're not going to take anything away from it. It's still an up day, but from a big picture perspective, they're kind of riding underneath without being able to recapture on a closing basis the 20-period moving average. We're going to note that it's a puzzle piece. It's on the table. Similar situation for the folks down at the transportation department. Again, riding underneath, can't recapture on a closing basis the 20-period moving average. Now, all in all, she's above most of the moving averages, and then when you flip over to a weekly chart, she's above all the moving averages. However, above this trend line, again, bullish by nature, so we're not going to put all the stock in the 20-period moving average. However, we're noting it. It's information. We take all the information in that we can, we log it down, and then we discard what we don't need later. We do not want an underline not information overload. All in all, she's bullish in the transports, but suspect underneath the 20-period moving average. We'll leave it at that for now. We'll take it one day at a time. What about the Q people? Well, we talked about this one last night. We talked about the fact that the first place she's going to head to is this high here. After that, which she basically hit today, let's see if it was on the button or not. So the prior high was 493.70. Today's high was 493.73. Obviously, no accidents nor coincidences in the market. Closing above opens the door for the next thing, which is basically the gap. The gap is at 496.34. That's what we talked about last night, which would become your next target above today's high. It's the progression of events. Team Qs. What about the financial complex? Anything wrong with the financials? No. Above all the moving averages, trend is your friend. Weekly chart strong, just eating time off the clock for 7 weeks in a row, including one dipsy doodle down. And this is, by definition, an uptrend eating time off the clock. That will be the case at face value until something changes. Do we have a sign and or signal of a trend change? No, we don't. Will we have one 2 days from now? We don't know, but if we do, we'll address it at the time and adjust accordingly. That's the way technical analysis works. What about the semi-space? Smash mouth, same routine. They're over here testing the highs from, what date is this? The 26th of September. Above the high, she gets into a different area where a spike above 259 becomes the next target. After that, it's 261 and higher. Write that down, put it on a sticky note. If you get a float them up into the weekend situation over the next couple of days, that's likely where you're going to find SMH 260 or higher. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.